Well, we're about to have a very engaging discussion on multiplying avenues with the right pitch. And without further ado, I'd like to invite our jury members, please. Let's welcome and put your hands together for Ms. Sagrika Shah, Principal Yan Fund. Big round of applause, please. We'd like to welcome Mr. Kunal Bajaj, Investor, DSP Investments. Big round of applause, please, for Mr. Kunal Bajaj. We welcome Mr. Manav Narang, Head of India, Plug and Play. And a very warm welcome to Mr. Nao Murakami, Founder and General Partner, Incubate Fund Asia. Thank you so much for joining us. And with that, let us start this discussion. It's going to be an engaging one, a series of presentations as well, on multiplying avenues with the right pitch.
Thanks a lot to everyone who joined. Last year, we had received a lot of flack for not having a space wherein enough and more people could join in. So this time we tried our best. So hopefully we'll not have the fight as much as what we had last time. So this essentially, Sagrika will take you through that, but Sagrika has been with us as a colleague for last 5 years. She runs our venture fund and will be taking through the journey of getting these 9 startups to present to you people. A lot has gone into making of that, and this is 3rd year for her to do this. Sagrika, over to you.
Hi, everyone. So this is Sagrika from the Fintech Meetup. We did this thing last year as well, where we invited a couple of startups to present to the stage audience here. So I'll quickly give you a brief about what we do, why we do. So we are one of the largest fintech ecosystems of India. We have run this show last year. And by running the show, I don't mean that coming here and presenting. By running the show, I mean the back work that goes behind, which essentially means that we received about 300 odd registrations on the form that we floated out in last 3-4 months. From those 300, our team has screened all of them. We spoke one-on-one to about 100 odd startups from there. And after speaking to those 100 odd startups is where we came down to around exactly 9 startups that will be coming here and presenting. Now, if you're wondering why is it 9 startups, it's not a last minute dropout, the 10th one. It's just that we couldn't find a relevant 10th to be here, and we didn't want to push the number. So it's just going to be 9 for you guys today. Why are we the best people to do this, if you're wondering that? We essentially do something called the Fintech Yatra, wherein we go across India, we meet with startups, we travel about 10,000 odd kilometers every year for 60 odd days, meet with about 400 odd startups, and we've been doing this for 7 years. So I personally have heard more than 1,000 odd pitches of startup founders, fintech founders to be precise. We are only focused on fintech. So in last 7 years, I've heard about 1,000 odd pitches. The good and bad part about hearing so many pitches is that sometimes you just know that this is not going to work. I think all of the startups have pretty much the same format in their decks or storytelling everywhere, wherein you'll find TAM, SAM, SOM, ARR, all the 3-letter jargons. But I think more than that, what we try to look for when we talk to founders is the storytelling aspect of it. And that's where personally, I find the pitches that do not have decks to be the best ones, wherein the founder just comes and speaks his heart out or her heart out. So I think that's what we're going to try to do today. But sadly, the format doesn't kind of have a free-flowing conversation. So we'll restrict each of the founders to have 5 minutes on stage, trying to convey their journey. I think we'll start. So the format of the event, just by the way, is that after this, we will have 3 startups present. We do have 3 jury members here. Shanti couldn't make it due to some emergency, but These three people, I will be calling one of them after three pitches to share their thoughts and about the sectors, about the startups, how did they find, etc. These are VCs from different sector of the game. We'll be going to that soon, but for now, I think we'll start off with the pitches. If you can please have the first presentation. Yeah. So I'm going to be inviting Hardik from LatIQ, if I'm pronouncing that right, on the stage.
Hello, everyone. This is Team Latic. Thank you. This Team Latic, we are a co-pilot for risk teams. We enable them to build their own models on alternate proprietary data. A little bit about the team. All three of us, we have been people who have been in fintech for the longest time. We've been the ones who built the first fully digital lending product for business loans in APAC, sold it worldwide, even invested in it. My tech co-founder started with Microsoft, even was on the day zero of Cred and built the whole stack as a founding engineer of GrabPay. I myself started from Flipkart, built the fintech stack there. Went on to build like decision science platforms. Recently, I was owning all bottom funnel experiences at Cred. In short, 25 plus years of experience between the three of us, and the only thing that we've spent more time with than our wives is finance, data, and SaaS. Coming on to what the problem is, right? RBI has been shouting on top of their voices financial inclusion, and UPay is definitely a success story in payments, but if you look at credit, insurance, investments, it is still an unsolved problem. We are still trying to underwrite Bharat users on the back of traditional credit scores. And like they say, objects in the dark don't cast shadows. So trying to look at credit histories of excluded people is not going to help us include them. That is the fundamental shift in thinking that we are trying to bring, where instead of looking at shadows, why don't we focus on footprints if we are really serious about bringing the next 150 million people and disbursing north of $500 billion among them in the next 10 years. And for that, what we've built is LaTeX. I'll talk a little bit about what the status quo is on alternate data. Just a bit of context, alternate data can no longer mean just underwriting on SMS and emails, but if there are 600 million Indians who are spending more than 1,000 petabytes of data on content, communication, and commerce, and leaving a huge footprint everywhere they go, we need to really focus on that. So the status quo is most of the alternate data today is presented in the form of black box scores. And these black box scores have a few drawbacks because of which they are not fit for the next 10 years. We'll just focus on two of them. The first one is that risk is relative. What might be a high-risk user for a SBI could easily be a low-risk user for another fintech, right? And risk teams of today need the agility to look under the hood and change things when the market dynamics change. Building these models on generic labels is very much like guesswork on who is high risk versus low risk, right? So that is number one. Number two is compliance. Why are these scores not front and center today? The primary reason is not potency, it's opacity. The opacity that hides the shady data sources behind them, as well as the regulatory risk that comes with it. And none of these scores can defend these decisions retrospectively when RBI comes knocking on the door with their interpretability test. So what we need is what is on the right, is for risk teams to be able to build their own models, for them to have complete control on what data goes into their models, what logics do they embed, and for them to be able to explain every decision that the model makes in a very, very transparent fashion. Now, the novelty in our approach is not novel at all. Instagram didn't win by creating better content, it won by enabling creators. AWS didn't win by making better servers, it won by enabling developers to do what they do best, which is create. And the risk teams and the decisioning teams of today are ripe for such a shift, and that is why what we have built is a co-pilot for risk teams. It is a service as a software offering where the service is building risk models that are customized and ground truthed on your own data, on your own training labels, and they're customized for your portfolio's user base and their observed behavior. This is what we've built. We've built a data consortium that brings in different kinds of profiles of the users. There is a trusted data vault because of which we are able to bring all of this data into our data vault. And the third one is the risk intelligence piece, which you will be seeing more of. The kind of data that the users of LaTeX have access to is transactional data, financial data, location-based profiles, even what kind of networks are these people into, as well as behavioral data. Now, if you look at the whole stack there is, right, we have realized that building just one side of the solution is not going to help. We need to build this in a full stack way. So I can keep talking hours and hours about how the full stack looks, how do we bring different kinds of data into the LaTeX vault, how do banks enrich them with different profiles about the users, and how does the agent help them build these risk models out of the box, right? But I think it is better if I just show you in a very quick video. Can we have the video, please? So what you see here is the platform where any risk team can build their own model on alternate data. What I'm excited to show you is this agentic workflow where you set a few objectives and you talk about some custom instructions on what kind of frameworks to use and so on. The magic starts here where the agent is now running different kinds of experiments, trying to assimilate their results, taking a step back and trying to course correct on every step of the way until it arrives at the best performing, most stable, and cost optimized results, right? A few intermediate steps that you can see here, it is trying different combinations of feature sets, different combinations of model architectures, and ultimately what it does is it will try to rank all of them based on performance, stability, and a bunch of other metrics. And what you get at the end are a few models which will be completely visible in terms of what they do and what are the features that went into it, what are the hyperparameters that are there. And what is at the bottom is the most important part, where you get a predict API, which is where you can just pass on any identifiers and you get the prediction on the risk model that you have built, and the explain API, which you can use retrospectively to explain any of these decisions when RBI comes knocking on your door. So on the back of this AutoML platform and the agentic workflow and the data partnerships, we have had some early successes. What we were able to do is we were able to detect 40% of the frauds, first-party frauds, on the platform for a small finance bank at the moment of sign up in real time, which typically took 45 to 60 days for them. We're also working with a bunch of other fintechs, financial services companies, and banks to help them predict who are the users who are primed for a particular cross-sell, or even acquiring users who are not just credit hungry, but also credit worthy. The end game for us is not just to transform the consumer side of things like you saw with the agent, but also to go very, very deep into the supply side stacks of all of our partners and build what we call AA 2.0, which transforms the account aggregator that we have today, which is more of a data sharing framework between a set of financial institutions, into an intelligence sharing framework which is not limited by any schema. This can be done if all the data partners can host mini models on their own infrastructure, which understand their data very, very well and contribute predictive power to the parent models on the client end without data ever leaving its source. So that's the end vision, and we are getting closer to it day by day. That's all from my side. Happy to take any questions offline. Thank you.
Thanks, Hardik. I think we've all heard elevator pitch being the most difficult thing, but I feel personally trying to fit in a demo and an entire pitch in 5 minutes is a great job. So having said that, I think we'll have the next startup, who's Manas and Sebal from Prosper. Can we have the Prosper slide on, please?
Good evening, everyone. So Prosper started in March 2022, and what we are trying to do, we are trying to create an intelligent product suite to empower your financial wellness. Can I get that slide changer? So think about this. Any people in this room, can we afford a person like Harvey Specter or Mike Burry? Mike Burry for our wealth management and Harvey Specter for any kind of taxation kind of thing. This is what we are trying to offer you. So what unique insight which we had at a Prosper after running this for 3 years, starting from a bootstrap journey to building this particular company to a scale where we have a high paying large group of customer. First we think is most of the people, the kind of generation, let's say a generation of, let's say, which is Gen Z or I would say millennial, now they don't want to work till 65 years of age. They want to go and have a career which is fulfilling for 20 years and retire post that. And once they do this, they want to make sure they have a good wealth to retire with. The problem which keeps on coming for any wealth generation kind of activity is, first thing is whether you are able to optimize your taxes or not. And the second thing is whether you are able to take care of the wealth which you have saved from your each day or each payroll. Can we optimize this? So what we have figured it out, we have figured out two different problem statement. One is a dynamic payroll kind of concept because we want to create and we want to go deeper into the user's life. So the first origin of money which generates for most of us is the payroll. Can we go and can we increase their in hand there by using the concept called dynamic payroll? That is the first thing. The second thing is now we have a good GTM channel to build our B2C product is what we are trying to do it by Super Saver Plan. So Super Saver Plan is an annual subscription plan which help you to manage your income taxes, wealth portfolio management and credit optimization. Credit optimization is very new concept where you can figure it out if my home loan in SDFC bank is at 8.1% with a kind of profile, which other bank would be giving me at 7.9, something like this. And this is not just, I would say, a single moment, but it keeps on checking. Some banks are hungry when they want to go and close their target, quarter target or financial target. They might give you a better loan offer or better transfer deal. Let's move ahead after our unique insight. So what is Prosper Vision? Prosper Vision is India financial super app. Most of the people have done this. Or I would say they have tried to do it. What was different with other people and why now this is different? We do not go, so if you see, talk about any other super app. So let's take an example. I would just take an example of PhonePe. I would take an example of Cred. They started with very, very raw commercial product. When I say raw commercial product means, are they getting any money out of their GTM? Or what is the way, is it pull product or push product kind of thing? So we figured it out, what is the best way to build it? Can we see the old way is tax advisor, every person who is a financial, who is let's say top 5% of Indian will have a tax advisor, will have a wealth manager and would have a bank or credit. Now can we remove this old way and go to the new way where we have a product which is a tax layer, wealth layer, and bank and credit. This all thing is led by not just by trained human, but a AI-led product. All this thing is interlinked. In order to manage your wealth or to upsell you any financial product, I need to get a exact purchasing capacity or purchasing power. How will I be able to get? The CIBIL score or the experience score is not sufficient in India. I need a complete holistic data for earning, expense, and what is your financial appetite. That I will get through by tax. Now, once after tax, I will be able to upsell you curated wealth advisory product. And once I know you are now my own customer, I have built a trust and I have given you, I have shown you a compassion by saving your taxes, by planning your wealth, just by taking a subscription price. Now I will ask, hey, your home loan, which you are paying at 8.1%, there is a Bank of Baroda who wants to offer people like you at 7.9. Do you want to do that? Of course, everyone wish to do, because it will be saving me 6,000 rupees per month. But the problem is how to do it. Just click the button, everything is done by us, the approval come, everything, and you just need to sign the documents which is sent by bank. So this is something which we are building. Now, the most important thing is why we are able to build this when a company like PhonePe, Cred have not been able to do successfully. Of course, they are doing brilliantly, but can we do with I would say, lesser money? Can we do with a better GTM channel? So the way is, if I see that three mega shift which is happening in India. First thing is most of the transaction which is happening is in India UP rail. 98% of the employees plan their taxes inefficiently. And the CFO, which is our B2B product, they are under pressure to improve the financial wellness and retention among the employees because they have to reduce their OPEX in order to show profitability. Now, if you talk about our solution, has already shown a PMF. Currently, we are at 3 million ARR. This is a net revenue, not COGS, not GMV. And by next 24 months, we will be at 10 million kind of. And the current subscription, if you see, we have a 12,000 paid subscriber, 30 plus a brand including unicorns, and the retention rate of 80%, which is split equally between B2B and B2C. Now the GTM, the B2B sale engine is able to build on a GTM of dynamic payroll.
We'll have to wrap it up.
Yeah. Okay. Okay, and this is our Super Saver product. So if you talk about the unit economics, we have a ARPU of 6,000, CAC of 800, CM2 for blended is 800, LTV to CAC ratio is 7.1. We are trying to make it 10.1. So this is how our channel is performing. And if you talk about world-class, of course, we have a good investor as of now. We have a good winning team. If you talk about Dave and me, both come from a product background. We have worked in various 0 to 1 kind of journey. And if you talk about our team, we have good people who has already built a company in past. So yeah, if you talk about TAM, it's something which you can always ask for. We are currently, this is our growth strategy, where we will be at December 2023, 2031, we should be at 100 million ARR. Yeah, if you have any questions, you can just go and ask me, or you can reach out to us over a LinkedIn, or I will be also available here. You can always do it. Thanks a lot. Sorry for taking time.
Thank you. So, thanks, Banas. So, I think next up, we have a startup that's completely in a regulated space. If that's exciting to all of the people present here who are investing in fintech. I'll quickly call Neeraj Chawla from STFT.
Hi, good evening, everyone. After, I think, going through the 2 sessions of exciting technologies companies, we are a very straightforward brick-and-mortar NBFC company, STFT Finance Private Limited. STFT goes for small ticket fast track, where we try to give loan against properties to real Bharat of people, micro and nano entrepreneurs who are based in tier 2, tier 3 cities, creating an impact in their lives and generating their livelihoods. Company is being promoted by 3 co-founders. While I look much better in that picture, but that's me only. You can do the KYC. So, and these gray hair are real. Divakar Pundir, who's been an engineering graduate and MBA from IIM Bangalore. He started his career with Citi, and you see the 3 common symbols, all 3 of them Citi. He started with Citi in the SME banking. 10 years he was there as part of credit. Then he joined Bajaj Finance at the right moment, both in terms of building his own wealth as well as the company, Bajaj Finance. He was in CXO roles, initially chief credit officer, commercial credit officer, and then chief business officer, where he used to manage a lot of FI companies which are similar to us in very nascent stages. And he was also 6 months he was a CRO for Bajaj Finance. So that's about him, and he brings in a lot of experience in managing the risk as well as business in the NBFC space. The second co-founder is Mr. Vishal Gupta. He's also was our colleague in Citi. He's an XLRI graduate and a qualified CFA. He has extensive 22 years of work in risk per se, initially in UTI and then Citi and then Barclays. He was director risk there, managing the credit risk, market risk, as well as he was instrumental in setting up their back office for the GCC operations, wherein a lot of countries outsource their, appraisal writing for the corporates. So yeah, and myself, I'm a CA by qualification. Started my career in Citi in 2001. Worked across in the SME banking. Worked across credit operations, credit, remedial. Uh, what else? I mean, operations, then coverage, capital market, startup, FIGs. So I don't remember. Many of things are missing out here, but yeah, lucky enough to got different opportunities. So all three of us started this venture way back in May 2019, and sorry, we started lending just before the COVID, which is November 19, and obviously, while it is 6 years of history, but 2 years, 2.5 years is wiped out by COVID. So really 4 years of growth, 4 years of journey. What we want to cater is our real people from India, Bharat, I would say, who have been doing business for either first generation or second generation, but they don't really have documentary evidence to prove their income, their cash flows, or they don't have IT returns. That is a problem we're trying to solve, and these are real issues where you see uh, aspiring entrepreneurs who would be wanting to grow their business or even stabilize or just sustain their livelihood, but don't get credit from the banking system. They would be really, we call it in our terminology thin credit, because they don't have credit history. Uh, they would have typically have their one residential house which is self-occupied, and uh, but income is undocumented, and the business is very highly cash intensive. So how do you solve this process, this issue? That is where we came together and saw the opportunity out here, as well as some social impact out here. Let's target this segment. So far, what we have done, so far, 2 minutes, okay. This market is a huge opportunity. There's some documented reports where it said 63 million MSME segment companies or individuals out here. A rough estimate, 155 lakh crores of market, which is 155 lakhs of turnover, at a 20% working capital requirement, about 31 lakh crores of banking requirements. And we feel about 25 lakh crore is catered by existing banks and NBFCs. So there's a huge market of 6 lakh crores, which is yet to be catered by companies like us. What we have achieved so far, we disbursed about 3,500 loans in our journey till date. 130 crores of total disbursals, current AUM of 67 crores. We are present in 23 locations across 5 states, 34 crores of net worth, and we are currently secured book of 90 odd %. We used to do unsecured loans earlier, but now we totally pivoted to secured. Individual ticket wise, if we see 6 lakhs in average ticket size, yield pretty healthy of 23 odd %. And we give LTV of 40% to maintain the balance in terms of exposure to the collateral. How do we deliver it? It's the geographic presence. The fleet on the street is the essential part of it. As I mentioned, there are 23 branches right now. We plan to increase it to 35 by March 27 and 70 branches by March 29. Being from the banking background, work across different functions, we fairly rate ourselves good in execution capabilities, and these are marked by robust risk and underwriting processes, supported by very strong technology base. We use LOS LMS, which is by Sanofin, and helps in building our book very efficiently, both in terms of the credit quality as well as delivery in time. Growth plans, we currently are at 23 branches, as I said. So average AUM per branch is about 2.8 crores. We are 65 odd crores. Year-on-year growth, we are planning to take it to 6.7 crores AUM per branch across 75 branches. So March 29, we are targeting 500 crores of AUM. Where do I see ourselves and why do we position ourselves? There's a market which is huge, as I mentioned, the large TAM. overall we bring on 60 to 70 years of work ex of the banking. Demonstrated resilience, seen two cycles. One is COVID, and second is the last year, stress in the unsecured book created by a lot of issues on the FFI thing. And our own commitment, which is about 35 crores in the company. So we are fairly committed to the company and its growth. So that's about STFT. These are our contact numbers. Any questions are welcome. You can contact offline as well. Thank you.
Thank you. So, one irony that I have noticed while hearing all the pitches since last 5 years is that the grayer the hair, the lesser grayer the area that they're building in. Having said that, that's my observation. But I'm going to be inviting Nao Murakami-san. He's joining us all the way from Tokyo and Singapore. And he is the founder and general partner at Incubate Fund Asia, early stage fund investing, and I'm calling him over to share what he heard and some of the feedbacks that he has, if any, and literally anything that he really wants to talk about. Please.
Thank you so much. Thank you for the introduction. I'm now from Incubate Fund Asia, and we actually manage two funds. One is the sector-agnostic seed fund. As the name suggests, we invest at the first VC round. And we also have some fintech portfolios. And also we have a growth stage fintech focus fund, which called the SMBC Asia Rising Fund, which is 200 million growth stage fintech focus fund. And we invest in India and Southeast Asia both. But still, obviously, India is much larger opportunity. So our deployment-wise, 85% of our deployment actually happening in India. I used to be in India for 8.5 years in Bangalore, but now I'm based in Singapore. So yeah, it's actually a very good mix of the three companies, from the AI to the pure brick and mortar NBFC. So maybe starting from the second company, the Prosperity.io, yeah, that one resonates a lot because even internally, not only in India but also in Southeast Asia, we have been discussing a lot how technically we believe any professional work or the outsourcing work, it can be legal, it can be tax, it can be wealth, or even some basic BPO work like the call centers and other things, can be disrupted by the AI. And then actually we are now closing the very large AI BPO company in Singapore we are now investing in. And also in India, we invested in the DPD0, which is the debt collection powered by the AI, right? So we are believing in the thesis. And then maybe this point I want to discuss with the founders maybe later, but our thesis is in India or even in Southeast Asia, any emerging market, the service element is very, very important. So the only product maybe hit to the 10 million ARR, it's possible. But beyond that, reaching to, let's say, 100 million revenue type of the scale, the tech can be sitting in the back and then making the efficiency for the operation and the service itself. But the service element, the serviceability will be very, very key. So we investing in any company who looks like an accounting firm, but actually is super powered by the AI. So it used to be one accountant can cover maybe 20 companies, but because of the AI support, this one accountant can cover now 200 clients type of the approach company. We are investing in Indonesia, in Singapore, and also in India now. So, but this Prosperity AI, it seems like the product company, but they're already getting 3 million ARR at the very early seed stage. It's remarkable. So maybe our thesis might be wrong. So I just want to discuss with the founders, and then how we can bring it from there is something we want to discuss. But I really like the concept of all of this, the professionally driven traditional way of the approach is now disrupted by the AI. So that's one I really like. And then the second one is the first pitch. I forgot the name of the company. And yeah, Latic is it's also very interesting. And then as our growth fund is backed by the bank, SMBC is the second largest commercial banking group from Japan. And then also now they are supposed to be investing in Yes Bank in India also. And then they own the very large NBFC in India also. And even this morning, I was talking to that NBFC arm in India and then discussing with them. And also I'm frequently talking to all the franchisee banks in Indonesia, Philippines, and everybody struggling on the risk modeling and risk control side, and then they want to implement AI to support them. But at the same time, how you handle the data and what kind of data actually you're analyzing itself is very, very, very important. And there are a lot of similar companies also emerging from Singapore and also in India also, right? So in that sense, how you guys are differentiating from the data side is something we want to discuss. And then also you need to crack these banks are kind of not easy to crack type of customer. You need to build a relationship and you need to present a lot. So it's the GTM and then the sales strategy itself I want to learn more. But the proposition-wise, it will fit not only in India. If you can do the PMF in India, maybe we can bring it to the let's say Southeast Asia, and then the other banks may have an interest for sure. So that's an interesting one. And then third one, the NBFC, and then this MSME lending. As the presentation said, the market-wise is super large, and then we also closely looking at the market. But at the same time, it's very, very competitive market, and many players exist in the market. It's from the incumbent to the new age tech-led players also. And then, in the sense like this MSME lending space, we feel the GTM will be the key. Also the risk control side, but given all the bankers are starting this company, and then I think in the sense like the risk controlling side, maybe it can be taken care of. But the GTM side, I couldn't see much from the presentation. So how they are different from the GTM side, I want to understand more. And if it's unique and differentiated from the other players, it might be a very interesting market because its market size itself is super large. And then this point, no one will question. So I just want to discuss on the GTM side with that third NBFC company maybe. Good. Enough? Thank you so much. But I really like the three companies, so I mean, we're happy to engage from the early stage or the growth stage side. So let's discuss. And then my associate sitting somewhere there also covers the fintech, so we can start the engagement. Yeah. Thank you so much.
Thank you. I think the good part about presenting here is that you, at least the startups, you do get access to one of the largest investor base. And we have made sure that whoever are present in the room at least are, most of them are investors. Having said that, I think we'll move on to the next startup. We have Vijay Makijani from Nurofen. Yeah.
You have the deck? Yeah. Hi, thank you everyone. I am Vijay, representing Nurofen.ai. At Nurofen.ai, we basically help banks and NBFCs in processing secured loans faster, right? So before we get in there, most of you who have taken loans, right, or people who have processed loans or seen someone taking loans in the family would relate to this. If I want an unsecured loan, right, I get it today. But if I need a secured loan, I have to wait for 4 weeks, right? So that seems to be a huge disparity, right? And therefore, what happens is when I need money, I desperately go take an unsecured loan or take a loan against gold, and then try to convert into a secured loan, right? So here we are working on the agenda. Can we make secured loan processing a same-day process, right? Basically, I've been told that I have only 5 minutes, so I'll skip most of the slides, right, and focus only on the most important ones. When it comes to loans in India, 40% of the volume happens on last 2 days of the month, right? So imagine if I am an operations person, or if I'm a salesperson, or if I'm a P&L owner, last 2 days of the month, I'm not going to double up or triple up my capacity, right, for the processing. So what happens is the team is forced to stay in office late, right, and process everything faster. And when you're fast, you can be either fast or you can be accurate, yeah, right? You can't be both, right? The other thing is, as a banker, you see 10 to 15% drop in the funnel because of the operational delays, right? Because the client typically goes to someone else, right? Gives application to two places. Whoever comes faster, I give a business to them. This 10% drop also comes because of lack of FTR, right? The first time right. If as a salesperson, when I meet you and I tell you that, hey, give me a couple of days, I'll come back to you, right? Collect all the documents, give me a couple of days, I'll come back to you. Versus I collect the documents and tell you, sir, everything looks okay. These 2 documents, please figure it out over next 2 days, and I'll process the loan. The conversations are very different. As a client, I get a very different confidence, right from the conversation. So we are focusing on that, wherein how can I enable FTR at every stage of the loan so that you save time at every stage, and the 6 times back and forth that happens on every secured loan comes to 1, right? So this is what we do. We basically enable FTR at sales, FTR at CPC. CPC is credit processing centers, or CPA if it is a decentralized, at ops maker and checker, right, and audit. So I'll just skip most of the slides, right? So basically the way our solution works is you basically share all your documents under the same application with us. We process it with our agentic ecosystem and give you the results. So these results, when you compare with human accuracy is somewhere in the range of 75 to 84% depending on the size or the maturity of the NBFC or the bank. We are right now at 94%. Right. Similarly, basically our system works on regional languages, so you don't have to, on month end you don't have to go and figure out, hey, who can read Tamil here, right? So basically the system takes care of it and takes care of handwritten documents as well, right? This is basically one of our first customers, Vinod sir. I'll skip this, right? So, what we are doing and why we are winning is, I think one is distribution, right? So basically we are a team of ex-bankers, and we speak the same language, right? Customers relate to it. We understand the pain points, and therefore we are able to move conversations faster. What we are working on is deemed to be very boring, right? So we are building in operations, right? But whenever you look at fintechs or anything that is happening, and what she also mentioned is the grayer the hair, the boring the space you build in, right? So this is one of the most boring spaces because operations is the most overlooked place, right, in the banks as well. And counter positioning, we are not revenue drivers. We are bottom line drivers, right? And at the same time, we help you in reducing your drop-offs. These are some of the case studies. These are some of the clients, right? So we have 3 live clients and 2 clients at integration stage. We've been winning quite a bit, right? And these are our investors as well. I think, yeah, good. 5 minutes. Thank you, everyone.
Thank you so much. I think one of the best parts about his pitch that I personally like is that he literally pinpoints on how this will make your life easier. And the next startup that I'm going to call is something that will probably tell you how it's going to save you money, if that is of interest as well. So we have Nakul from OnPoints with us.
I think what she said, the blacker the hair, the more interesting the space. So if I could just get the clicker, please. Okay. So these next 5 minutes will save you a ton of money. And let me tell you why. And as you can guess, it has to do something with loyalty rewards. I flew her on a free flight. My hotel is paid for thanks to my credit card points. And I wish the same for you after the end of the 5 minutes. So it's Anurag and I, big tech, Meta, Uber, Google, Zeta, you name it. And we've been there, done that, both in the US, UK, and India. So I think we know a bit of what we're trying to build. But what's common between all of these places, and I have pictures to prove it if anyone wants that, is I never paid fully for a flight or hotel stay to any of these locations. Now, I'm not a genius. It's a luxury, actually, because I have 30 plus credit cards that I signed up for in the US and in India, which had insane sign-up bonuses. But unfortunately, not everyone can do that. And what did I do with those credit card points? I did not redeem for cash. I learned that much later. I converted to travel rewards. But if you think it's that easy to do and why can't anyone do it, I'll tell you why. There are 2 main reasons what determine what card you and I can get. One is income and second is credit score. Does any one of us know our credit card reward rate here today? Raise your hands. If you do, you're smart and everyone else should find out. So entry-level cards give a 1% reward rate. Mid-level cards give a 2% reward rate. And if you're really lucky with sitting on those premium Infinia and Magnus Burgundies of the world, 4%. And if your bank gives you anything higher, they're funding it. But earning rewards by swiping your card is like saying the best way to earn frequent flyer miles is by flying. It's really not. The better way to do it is get those sign-up bonuses. But these are only once. You can't keep doing that repetitively. The better way to do it is double dipping via shopping portals. But that's where the problem starts. The banks discriminate amongst their best customers. So if all of us get 10x, but if your x is 1, your x is 2, and your x is 4, there's a 30% differential right there. Now, not only earning, burning is also broken. Because when you redeem your points for cash, worst thing to do, because you're earning 25-30 paise per point, gift cards 40-50 paise. That's why the best people always transfer their points for travel. But if your bank doesn't have any travel partners, good luck trying to make use of those points. But now the banks throw in other kickers that only if you're their premium most customers will your points be worth 1:1, and for anyone else, and I mean anyone else, their points are worth maybe half or lower. And most importantly, all the portals that we hear of today, they come with capping limits. Again, the more premium the card you have, the higher your limit, and for everyone else, good luck. So On Points here is about to change that. Think of it as earning points on cash, UPI, debit or credit card payments. Again, not funded by us or VC money, funded by the brands. And the way it works is you use anything. I'm not even asking you to use my card, my UPI app, nothing. We are none of that. Just come and visit our online app or website or browser extension and click through any of the brands that we have. We have 200 plus brands right from Uniqlo, Myntra, Nykaa, Ajio, you name it. And then what can you do with those points is exactly what you want to do in the first place, like what I did. You can redeem them for travel. You can redeem them for gift vouchers today of 100 plus brands from Uber, Amazon Pay, Zomato, Swiggy, Air India, Taj, Marriott, etc. Or you can actually make flight or hotel bookings using a white label OTA. And the biggest kicker, one on point is always equal to 1 rupee, unlike a bulk of programs we have seen out there which have started out strong but eventually gotten devalued. How does it work? Like I said, you come on our app or website. And again, we don't show you a product that you have to buy. We show you the whole website catalog. So let's say I'm in the market for a pair of Bose headphones. Bose hypothetically will give me 12% commission. We pass on 2/3 of it back to you as the user. The 4% margin that you don't see is On Points margin. We don't touch that to fund the rewards. You only earn 8% and then you convert 8% to On Points. So like your credit card statement, you get On Points as in when you make the transaction, and then you can redeem them for one of 3 options like we saw. So we not only make money when you buy through On Point, we also make money when you redeem. And depending on what you redeem it for, we make anywhere between 0.5% to upwards of 10% of the redeemed amount. What's the product? It's a browser extension. So I can be on Google today and I can type Uniqlo. Because Uniqlo is a partner brand, you'll see it pop up. You don't have to go through us. If you are directly going to the advertiser's website like Ari does here, you can just activate the cashback. And obviously, we have online On Points that you can earn. We are also going offline in a big way where you have in-store On Points and also points on dining. And most importantly, we have something I would call a Google Flights for Miles. So you don't have to do the mental math of checking how many points or miles does it take to fly from Delhi to Singapore. This is my favorite slide, and this is what matters most. Let's say if all you want out of this is a free flight from Delhi to Bombay for GFF costing 5,000 points. By the way, it does not cost 5,000 points during GFF. And let's say if On Point can only add 2% extra to your reward rate today. So anyway, cash gives you 0, debit cards 0.5, entry-level cards 1, 2, and 4 like we saw. So someone on a debit card earlier had to spend 10 lakhs to get 1 free flight. Now they can do it in 2 lakhs because their reward rate just went 5x. Similarly, as an entry-level card who was earning 1% rewards, now your card is as good as the topmost card that your bank offers. Even for a mid-level card, your earning capacity or redemption capacity has kind of doubled. And even if you're sitting on the best card that all the banks have to offer today, On Points is of immense value because we've just made your card more powerful. So how do we monetize? The biggest way we make money is from affiliate. From e-commerce GMV, we take a percentage of the transaction that you spend through On Point. And like I said on redemption, depending on what you convert to, we make anywhere between 1% on flights, upwards of 20% on loyalty programs. The GTM strategy is pretty simple. We partner with brands, they partner with us, and we promote each other, both on the earn and redemption side. For example, we partnered with Flipkart Supercoins a couple of weeks back. So soon you will be able to convert On Points to Flipkart Supercoins, actually at a value greater than 1 rupee because they are funding the conversion for us. Similarly, you will see a lot of in-app linkages that what you may have seen with Zomato and Air India and Swiggy and Indigo. So we are going to brands and doing that in-app link. You can link your OnPoint account once and forget about it. You will automatically keep earning. Secondly, organic, where all the YouTubers and Redditors are sitting and discussing credit cards and offers all day. That's where he will be. Why now? Because credit card explosion has already happened in India. Everyone loves to travel, and your favorite loyalty programs are getting devalued day by day. Most importantly, it's a win-win value prop for everyone. The users get extra rewards. The credit card issuers, without having to fund it, their cards become more preferred. The brands only pay us for sales, not for clicks or impressions. And lastly, the loyalty programs user base can see significant growth. How big can this be? Just imagine the 400 million UPI users today who earn 0% on person-to-merchant payments can now be earning the same rewards as someone with a top-tier card. Competitive landscape, I'm sure we would have thought what everyone has done. Most importantly, there are multiple ways to earn, and there are multiple ways to redeem. And like I said, one on point is always one INR, which I can't say the same is true of many of our competitors. So we have 100 free on points for the first 100 users today, but overall, I hope you can make some value and figure out your credit card reward rate and start earning, shopping, and traveling better. Thanks.
Thank you. So we are a B2B investor, so I'm always very excited about consumer businesses. And I went shopping just a day before I heard him, so I regret that. We are going to call Snehanjan from Xeron now. A very interesting fact about them is they were a bunch of hackers in college who started this.
Good afternoon, everyone. This slide has gone away, but it's fine. Let's introduce to you, all of you, Xeron. What we are, what we aim to be. What we aim to be is the North Star in cybersecurity. How do we aim to be that? By changing technical cyber signals into financial decisions. Now, let me showcase you the current problem that there is. What cyber risk managers face today are a lot of signals without context. They have a lot of tools with them, but they can't make head or tail out of it what exactly is the outcome of those tools. And which results in reactive and often costly decisions in cyber risk management. Now this problem has accumulated to a $130 billion existing TAM. What's adding up to it is cyber risk intelligence is actually becoming the next evolution of the GRC space. The regulators across the world are asking their regulatory entities to bring about cyber risk quantification. Very recently, SEBI brought about the CSCRF, and the similar regulations are being brought about across the globe by SEC, DORA, NIS, you name it. Also, AI is bringing a new real-time context towards cyber risk intelligence. What we have built so far is an AI-powered SaaS platform which acts as a single point of truth for cyber risk intelligence. Well, how do we do it? We collect data, firstly from external signals, which is our external attack surface, where we scan through 4 billion plus subdomains across the globe. Also, we collect internal signals, which is a use case for us. We have 1,200 plus integrations, which is by far the biggest number of integrations there is in this industry. And we collect contextual signals for that industry, for that market, and for that geolocation. We drive these signals through our Xeron's engine and give two very specific outcomes, which is, firstly is the cyber risk quantification part, where we provide the financial impact, the actionables and visualizations, and we provide an AI-powered strategic operations workflows for our customers to actually mitigate those risks. Our GTM is very clear. Our target segments are the regulated segments, the BFSI, the health sector, as well as the cyber insurance ecosystem. Our entry motion is through pilots. We have a 15-day pilot program with the enterprises. The channels are often direct and inbound, as well as system integrators. We are partnered with 3 of the 4 big fours. Marketplaces, we are available in 2 of the 3 major cloud marketplaces, and as well as cyber insurance providers. Our product motion is, so we have 4 modules and we land the customer to 1 module and generally increase our modules in the customer's ecosystem. What is our differentiator? We have a AI-driven mode. We have a threat feed which has an added layer of cyber risk intelligence added to it. We have a proprietary model, which is the Kubera model. It's a quantified business exposure to risk. You can check it out in kubera.org, which adds an added cyber risk layer to our threat feeds. And also we have a huge data repository. As I mentioned earlier, 4 billion plus subdomains scanned passively, 1200 plus integrations. We can integrate to every nook and corner of an organization and provide their cyber risk data for the risk managers. This is what we have done so far, 170% year-on-year growth, 25% account deepening and 30 plus clients. Some of our clients include HDFC Securities, HDFC Ergo, Deloitte, ICICI Securities, Flexem, Dhan, 361. Case in point, 361 is one of our global competitors' largest Indian client, which we replaced them because of our integrations moat. This is the team. We were 4 bunch of hackers in our college days. We have been in this space for a better part of a decade now. Sanket was the technology head at Microsoft Imagine Academy. Santosh was ex-TCS. Swarnali was ex-Capgemini. I was also part of Microsoft Imagine Academy as an operations head. We have been joined by Mr. Shantanu Sengupta, as a Chief Strategy and Growth Officer. He was the ex-MD and CEO of Wells Fargo APAC. And our head of R&D right now is Mr. Shubha Vardhan. He was the head of, he's our head of research, and he was an ex-scientist at NIST. We have a 37 people team right now. What the future holds for us is we are venturing towards United States. We have strategic partnerships there and also building in tech-embedded partnerships where we are embedding our risk intelligence to other products as well. And also we are building out AI moat as we speak to actually have more use cases on the data that we have collected. Thank you so much. Open to questions offline.
Thank you. So I'm going to be calling another jury investor that we have, Manav Narang. So he is from the corporate venture side of story. Like now was an early stage fund, but now we have a different side of investor. Over to you, Manav.
Okay, thank you. Hello, everyone. I don't know how many of you know about Plug and Play. We've been around for 20 years. First invested in companies like PayPal, Dropbox, back in Silicon Valley. We just launched in India this year when we set up the Fintech Accelerator with Gift City. And we are going to set up a $50 million fund. Globally, we have around 2,000 portfolio companies, 40 unicorns. This year, we minted 2 new unicorns, Zama, which is in the cybersecurity space, and Iralo, which is an eSIM marketplace. So from the startups, I think one thing I'm very glad about is, at least in the first 6, there's no cross-border payments companies. I attended GFF 2 years ago, and all I saw was cross-border. So I'm glad that we are looking forward to innovative areas rather than just trying to cash into 1 or 2 areas which are big. And actually that happens a lot where companies and governments like NPCI are not only your supporters, but also sometimes your biggest competitors and destroyers. Speaking about the companies which were presenting, loyalty tech is definitely a very, very big area. As you know, Gen Zs and millennials take hold of the wealth, they are not swayed by just the cheapest thing. So quality, getting them used to it, get used to using your products is definitely very interesting. I don't know where Nakul is, or if he recognized me. I'm his senior from undergrad. I just saw him and I realized it. So that's definitely a very interesting space where a lot of companies are, a lot of investors, a lot of banks, a lot of brands are looking into. But at the same time, a very difficult thing to crack when everyone wants to create their own loyalty program. And I mean, I can also go into a masterclass on how loyalty really helps create strong businesses. A lot of companies, United, SQ, a lot of them have built these profit-making machines on the back of their loyalty programs. When COVID happened, United Airlines had to take out a $5 billion loan, but the airline was worth minus $3 billion. And the United Privilege Miles program was worth $20 billion because of the amount of money they earn from the card companies and others. Again, cybersecurity is something which is going to make a lot of sense. A lot of corporations, a lot of governments are looking into it, given that as we go into more trustless systems or automated systems or rely more on AI, there will be a lot of risk coming in on from the cyberspace. And one thing I would say we need to do a bit better on is have more women founders. I think only the last one had a female co-founder, but the rest did not. I don't know how to solve it. I mean, and me saying it, I don't think it makes any sense because I'm not a founder, I'm not female as well. But I hope next time we do this, we have more female founders as well.
Trust me.
Yes.
We try.
Okay, thanks. And yeah, the founders, anything I can help with. We are just setting up the fund, but we do invest from the balance sheet. And we are, with the program that we've set up in Gift City, we are supporting startups. It's a zero equity, zero fee program. We're not looking to cash in on any of it. It's paid by the government. And we have come in to support 250 startups over the next 5 years, invest in around 50 to 70, and take about 50 startups global. We have over 70 locations globally. We run the DIFC Accelerator. We run the program with Enterprise Singapore, Jetro, you name it, and we have an office in that city helping startups and governments and corporations. So wherever we can help, please feel free to reach out. The startups who are presenting and also the ones who are here. Yeah, thank you.
Thanks, Manav. I think we do try a lot to find women co-founders, but somehow I see a lot of women here. So my thesis is that a lot of women are investing, somehow not building. But having said that, we'll move on with the pitches. So we have Vishal from Bright River. Can we have the presentation on, please?
Hello. So, hi, I'm Vishal. I'm co-founder of Bright River, which is an operating system for private markets. So, sorry, can I? Yeah, please. Can I? Press this one. So, private markets are changing in fundamental ways. High AUM growth means investors have to raise, invest, and return more capital than ever before. Decision-making must be faster because liquidity profile and transparency requirements of the investments are changing. There's an expanding investor base in private wealth and high net worth individuals, which demands more transparency. With a democratization, it's going to lead towards more regulations. So we need a faster way of working. Right now, 38% of private market investing is just paperwork. Reviewing hundreds of deal documents, looking for sources, data in dozens of sources, drafting IC documents. This process does not scale. This process can't work with faster decision cycles. So we need to go from tired old process to a new process, a wired process, smarter one with Bright River. Our platform saves clients nearly 30% of the time during a deal lifecycle. We reduce the time spent on basic activities by 90%, freeing up time to do on more value-added tasks. Better information allows for faster decisions with higher convictions. So here's how we have built the platform. First, we have a foundation of domain-aware search and data aggregation. So we have developed search algorithms that don't just do keyword search or vector match. They parse and index several deal documents with a deep understanding of private market language. Our system can ingest data from multiple sources: deal files, past transactions, proprietary data sets, internal system, web data, spreadsheets, and even structured databases. The result is a single source of truth that investors can trust. Second, we have customizable agent. So unlike any tools that are out there, our AI autonomously orchestrates, just like Manage.ai, several AI agents to produce any analysis that you want in your style. And they can even run quantitative analysis, compare deals, generate Excel sheets, financial models from scratch, and help you explain it in great detail. We also have collaboration on our platform. Every action can be shared with entire deal teams and external partners. And finally, we have portfolio intelligence because everything is connected. Insights flow from individual deal levels to portfolio levels, giving you a complete picture. Right now, we make investment teams faster and more consistent. Next step we are right now doing is to increase more number of agents, making them more autonomous to execute workflows end to end. But our end goal or long-term goal right now is to build towards network effect. We want to build privacy-safe GP-LP discovery and recommendations, where investors and managers can find each other in a better way, more efficiently, based on strategy and fit. Today, we are at an inflection point. Our first client subscribed in May, and now we have 14 LPs and GPs trying our platform. That's 80% client growth since August. This includes fund of funds, sovereign wealth funds, buyout funds, VC platforms, even placement agents. As we go to market, we have a pipeline of 100 qualified leads, 60% of them being in Asia and rest in the West. A core tenet of ours is that purpose-built AI should not be for top 5% of LPs and GPs. We have designed our platform to be intuitive, full stack, and required little onboarding. So this opens up a broad segment of small and mid-sized LPs and GPs and their advisors that make up most of the market. It also puts us in a position to serve institutional requirements and provide complex enterprise setups and customizations. And our pricing model reflects this strategy. So we offer flat monthly or usage-based prices on a per-user basis, and add-ons are charged, billed separately. So we expect an average contract value of $55,000 per customer, ranging from $15,000 to $200,000, depending on the investor. Price point is consistent with what these firms pay for technology and data right now. But we aren't just looking at replacing technology budgets. We also generate savings in terms of human capital, analyst teams, data scientists, and even external consultants. This is easily at more than $2 billion market size. A market that our team is uniquely qualified to win. Our team has years of frontline investing and experience as GPs and LPs. We have data science experience at top asset managers. And we have engineers who have gone from 0 to 1 and also led a development team at unicorn scale. And we have a great panel of advisors who have deep market experience and global networks. So far, we and our angel backers have put in $600,000 to build this product to the market. Today, we are at an inflection point as depending on surveys, 90% of LPs and GPs plan to use AI within a year. And we have a complete turnkey solution that can add value as of today itself. It's time to invest and scale Brightover globally. And we are raising $3 million to expand the team, build our global presence, and continue down our product roadmap. So if you are interested in building Brightover with us, we would love to connect. Thank you so much.
And my co-founder couldn't be here because of visa issue. So I had to
Thank you. For the amount of money that VCs invest into tech business, I think VC as an industry is the least tech-driven industry, in my opinion. So I think, just by the way, for people sitting in this room, we will be showing a QR code at the end of the session, wherein we'll have all the startups written, and you can showcase interest in case you're wanting to in case you want to explore further with them, and our team will connect you with them. Yeah, we can call the next startup, Samira from True Hypothesis, please. Oh, she's not here, okay. Sorry, I had been given her.
No problem. Not a mistake.
So hello everyone, I'm Samira, co-founder at True Hypothesis Solutions. So Hypothesis essentially stands for Hypothecated Loan Receivables and Securitized Assets Monitoring System. So we are particularly focused on the wholesale exposure that banks and a lot of other wholesale lenders take with retail lending, retail focused on lending NBFCs. So we have about 10,000 NBFCs in our country. Most of them are focused on retail lending, so together they contribute or manage a retail loan portfolio of more than 25 lakh crore, and bulk of their funds are coming from the banks and other wholesale lenders in the form of debt. And when there is debt, it's for a specific purpose, which is for onward lending of retail loans. And so the same loans are offered to the banks and wholesale lenders as security. But when there is a diversion of funds on part of NBFCs, they do not have. I mean, the NBFCs will not have invariably enough assets to cover for the security, and that's when they resort to a lot of manipulation and incidents of frauds take place, where the same set of loan assets are hypothecated to multiple lenders, which is nothing but a duplication and a fraud. Also these NBFCs, we know that they raise money through securitization of the retail loan assets as well. So there are instances where because of the shortage of the asset coverage, they would duplicate loans that are charged to other lenders in a securitized pool as well. But today, none of, there are no systems actually in our country to kind of give visibility to the wholesale lenders on these, such sort of manipulation, duplication of, the asset cover, etc. And even RBI is, kind of drawn, a lot of guidelines on the lenders will have to take a closer look at the loan assets charged to them as security, and also capture early warning signals in terms of and ensure that the underlying loans are are existent, are they maintain continuity, and also they maintain exclusivity. And if there are data discrepancies, in what is reported to the lenders and what is reported to the credit bureaus, we don't have systems to really check whether the data is really accurate or not. So as a result, you must be wondering, why this is such an issue. right? I mean, because lenders are happy as long as they're getting their EMIs paid by these, NBFCs. But when things go wrong, they really, are big. And we can see that about in the last 7 to 8 years itself, we have seen 70,000 crore of worth of on-lending portfolio which has been at risk, due to loan defaults and various other frauds such as diversion of funds, on part of these NBFCs. So this is where we come in. We propose to be this infrastructure to systematize the monitoring of on-lending security interest for the wholesale lenders and banks. And for this, we propose to aggregate the underlying security interest or the underlying loans, from the wholesale lenders, because these wholesale lenders, get their security interest statements on a monthly or a quarterly basis, depending on their, terms of sanction and agreement. And in a multiple banking arrangement where there are multiple lenders lending to single NBFC, RBI also encourages exchange of information between the lenders. Not only encourages, it stipulates, in order to kind of find out incidents of fraud at a very early stage. And therefore, although we may have a few sign-up lenders to begin with, we have devised a mechanism where we'll be in a position to verify these underlying loans with the non-signed lenders as well through the process of notification, and the RBI guidelines cover this as well. And we also make sure that in this whole process, the data confidentiality is maintained. There is, personally identified information, of the, end borrowers, which are captured. They are not being used for any sort of duplication analysis. And we have, kind of also ensured that, the data encryption as required by RBI is, adhered to, and even the DPDP Act, compliance on the data security is, taken care of. And through this, we are in a position to give insights to the wholesale lenders on many of the early warning signals, so that they can take a cautious approach. Right, I mean, if they're not aware of these early warning signals, right, I mean, they tend to take more and more exposure as long as they're getting their, EMIs paid by them. But when they start looking at these early warning signals and find out there are a lot of discrepancies, manipulation which is being carried out by these NBFCs, they can restrict or take a call on the exposure that they take with these, NBFCs. So, and why us? As you can see, there are many entities, information systems, that are capturing this information to some extent, but we are the only ones who are going to cover the entire gamut of wholesale loan transactions, across wholesale debt, the direct assignment transactions, the securitization transactions, and even the co-lending transactions. So which will give a complete view of where the status of the underlying loans is concerned. And it's not just the transaction information and the security interest information which is widely captured by many of these entities we see here, but the granular details of the underlying security interest, and also the early warning signals on we red flag security interest duplication, and also red flag discrepancies with the help of integration with the credit bureaus. So we would be the first entity to do this, carry out the systematization of the on-lending security interest data. And these are our products. Our flagship offering is a risk solution where we help these lenders not just in knowing the charge status of the underlying loans, but also provide deeper analytics. If they are willing to integrate with the credit bureau, we can give further analysis on the data discrepancies, the variance analysis, and even the migration trend as well. And on the marketplace, it's a complementing product since we are already covering the wholesale debt. So we help the connect the loan originators as well as the investors to carry out the DA and PDC transactions on our platform. And there are plenty of marketplaces already there, but how we are different is we are helping the loan originators to create a minimum compliant pool on the platform, which none of these systems are in a position to do it as of now. And also, for the investors especially, they can carry out the pool selection process end to end, completely automated, and with the help of CB data. And our revenue potential is coming from these two, streams. And currently, the market of security interest is 9 lakh crore, which is expected to go to about 20 lakh crores in the next 4 to 5 years. And a billing to the wholesale lenders is going to be about 0.02 to 0.03 percentage. And as we see, the potential is about 400 crore, per annum, 4 years, 5 years down the line. And we look to capture a market share of 40 to 45 percentage, on this. And on the securitization transactions, we would bill on the transaction, value close to at an average of 0.3 percentage on the, pool placement arrangement. And our progress so far, we have developed. Developed the minimum viable product and looking to beta test with a couple of wholesale lenders and having active conversations with them. And this is what we're looking to raise a pre-seed capital of 3 crore to begin with to support our beta phase and further development. And this is our team. I come with a wholesale lending experience of lending to more than 35 NBFCs, and we have our co-founder CTO who is experienced in providing technology solutions to banking and finance for the last 3 decades. And Kishore Kumar is an advisor and also part of the founding team. And we have Mr. Shantanu Pense, who is a former chief general manager of State Bank, who's been advising us on the product and strategy. So I end here, and happy to answer any questions. So we are, we share a common vision of making the process more transparent, thereby helping the lenders reduce losses and reduce frauds. Thank you.
Thank you. So since we're a little tight on time, I'll quickly move on to the last startup of the day, Shubhankar Sengupta from Creditex.
I have that slide change. So forward is this, back is this? Yeah. Hi. Good evening. I thank the organizers of GFF for saving the best for the last, with all respect to everyone. But also the pressure is, I have to prove that brevity is the spice of life, right? Because since we're already short on time. So yes, Creditex, India's first AI-powered lending exchange. And we are focused on the MSME sector, starting with MSMEs at the lower end of the market, entities which are more proprietorship run, far less formalized. And basically serve as a lending exchange, a platform where MSMEs come, are onboarded with the help of our distribution partners. And the other side, we have banks who are hungry for this kind of a segment. I don't need to talk to you all about the importance of the MSME segment in the country. With our aspirations of a 5 trillion economy, with the need to create more and more employment in this country, it is the MSME sector which has to do it. We know that the credit gap is at least 25 lakh crore, which is about $300 billion. And it is only 1 in 5 MSMEs which get credit. And that too, most of it is concentrated, those MSMEs who are in the upper end of the pyramid. But what has changed now, and for some of the speakers also mentioned a little while ago, of course, that a lot of the digital rails have come into the picture. You're all aware of, we are at a Fintech summit. There is a regulatory push, and life is changing in the MSMEs also. With the UPI becoming ubiquitous, right? There is more digital footprints which these informal MSMEs are also leaving behind, even though they may have a thin file, credit. And where do we want to go with this? We talked about the credit gap. At Creditex, we want to facilitate 100,000 crores of disbursement to at least 1 million borrowers over the next 5 years. Emerge as India's leading exchange model platform for MSME lending, and of course, be profitable, not only for us, for all the stakeholders, our banks, our distribution partners, through lower cost of acquisition and definitely lower NPAs. How will that happen? Data science. I think this is the third iceberg that you are seeing, so I will not explain what an iceberg is. But what we are, of course, undergoing, when we go below the surface, we're talking about using data science for business potential analysis, behavioral risk factoring, use of psychometry, geospatial analysis, socioeconomic data, which is much underused in the Indian context. And this is an example of that. I will not run through this, but I'll just take probably a minute to explain. There are today well-tested psychometric tools which analyze people for the one that we are using, for their entrepreneurial ability, for their propensity to repay, for their ability to learn. And we are converting that into a decision-making tool for the lender to decide what is your level of risk you want to take with this kind of an individual. What are their behavioral attributes? And based on their behavioral attributes, what are some of the risk mitigants that you should look at? Does a customer need a higher degree of follow-up, right? Or there could be some, they really don't need too much of follow-up, you don't have to worry about them. Geospatial mapping. This is a map of West Bengal where we've added multiple layers. You can't make it out from here, but I'll tell you what's on these concentric circles that you see are a 5-kilometer radius around SBI branches. On top of that are overlaid rail lines and highways, state and national highways. On top of that are overlaid towns with different, the green bubble shows the size of the population. And this is an example of how you can use some of these layers to decide on, your business decisions as to where you want to open a branch, why you want to set up a distribution network. So a lot of data is available today. It's how intelligently do you use it for your business decisions. This is just one example. And so what are we bringing on the table? As I said, we are an exchange. We are the middleware. So we are working with lenders on the one side, banks, helping them reach MSMEs which are beyond their normal, distribution network with our AI-driven, data science-driven analysis and underwriting assessment, leading to lower NPAs, help them acquire customers faster and cheaper. And of course, on a platform which is compliant with all regulatory requirements. That obviously has to be given. On the other side are originators. Yeah. Who are the originators? It could be anybody with a widespread grassroots distribution network. It could be smaller NBFCs, MFIs, farmer producer organization, SAG federations, anybody. What's the benefit for them? We help them do business with some of their customers who they otherwise may have lost, either the customer, the business opportunity, a lower cost to serve, and obviously income for them. And why we think we can make it happen is because of the leadership team that we have here. I'm here with two of our other co-founders. We have 150 years of experience across a wide sector of industries. We have people from tech, from insurance, from banking, from financial inclusion, and Fintech. Right, so I'll not go into the backgrounds of each of us, given that the shortage of time. And so all of us have worked together in some form or the other in these 25 to 30 years of work experience that we have. Where are we in our early stages? We are already working on the ground with 4 originators and also doing a pilot for an NBFC, where we are helping them identify customers from their database, running our filters, helping them identify customers who have higher potential for lending, right? And through that, being able to suggest to them which of their database of the customers should they be looking at for giving higher ticket loans. What drives our revenue? As I said, we have an end-to-end platform, right? From prospect hunting to customer onboarding to customer assessment, disbursement, recoveries, and collection, right? So on this board, on this platform, our revenues are, of course, one part of the revenue is the use of the software as a service, which of course would be based on usage and subscription, where our platform, and you need not take the entire end-to-end solution. There could be people who want to be part of the solution, who probably want our underwriting engine or our data analytics. For that, again, the income is based on the volume of transactions happening through the platform. And of course, for insights, which you saw some examples of, which are a premium subscription, for which, of course, there's a certain payout based on the kind of, analysis that we do for you. And that's all. Was I on time? Thank you very much.
Thank you. So finally, we'll call Mr. Kunal Bajaj on stage. He's been there, done that person. He built Clear Funds and sold it within 3 years. Post which he's worked in VCs and is currently at DSP as investor and advisor.
Thank you. Firstly, thank you to the Fintech Meetup team for curating an outstanding list. I heard you guys went through 100 of them and actually spoke to 100 startups to curate this list of 8 and 9 companies, and they were all outstanding. I represent the DSP family office. The family owns the asset manager DSP that hopefully some of you have invested with. And our primary focus is, while we invest in funds, we quite like investing in fintech, particularly those that are ancillary to our wealth management and asset management businesses. So the quick feedback on some of these companies, clearly Bright River is solving a very real problem, and they seem to be early along the journey, but it's certainly a very real problem, particularly for private market investors, having worn this hat both at a VC shop and now at a family office. I think you're inundated with a whole lot of information, and it's actually quite demanding to try and make sense of it sometimes on very aggressive timelines. So, I don't know if you have an investor yet, but you certainly have a potential customer in us, and we'd love to chat with you. The other, on Hypothesis and Creditex, I'll just touch upon them for a little bit. It is a very large market opportunity in terms of both monitoring credit pools as well as a marketplace. I think some of the questions that are in our mind sometimes as investors are, well, lending is a very, very large opportunity. You don't want to be in a business that essentially is a vendor, because all of the margins tend to sit with the people that have the balance sheet. And to what extent can you actually squeeze the margin out of those with the balance sheet into you as a very core technology services provider is a question that we're always wondering about. There are people that have been able to answer that question successfully, but the people with the balance sheet tend to keep most of the margin, and I think we know how a lot of the banks particularly operate, because that essentially, do you have the customer and do you have the capital, tends to matter a little bit more than whether or not you have the tech, and that's sort of what we're looking for, whether or not there is tech that is so valuable to make a huge difference. And maybe I'll just take a minute or two, having been on the sell side myself. I spent about 15 years on the sell side at Credit Suisse, CLSA, Jefferies, and Goldman as well. Is that when we're looking for some of these pitches, you have to sort of stick to the tried and tested method. Just please address the team, the TAM, the traction, most importantly, the timing. Why is this the time for whatever you're building? Because building is hard. I've been a founder myself. I had a startup that I ended up selling about 4 years later. Building is incredibly hard, but telling the story about why the timing is just right, rather than falling in love with the product itself. I think the product can come later, but the mission and why this is the right time for the product you're building is actually a more convincing argument, rather than going into the detailed product map of what connects with what, because it's very hard for people to absorb that very quickly. And then finally, the only advice I give founders every now and then when they're pitching is guess what the attention span of a goldfish is. And the answer is 8 seconds. And guess what the attention span of a human being in 2018 is? And the answer is 9 seconds. So if you tend to waffle around all over the place and show us all of these complicated diagrams, most often than not, you've actually lost the investor. So stick to the time and tested script, go through what you've seen and, hundreds and hundreds of other pitches over there. Don't overcomplicate the story in an elevator pitch. And your job here is not to tell the entire details and the detailed plumbing about what your company is all about. Your job here is really to go and try and get a meeting in which you can actually win a meeting rather than actually win an investment is what I'd advise people to do. But that's it. Thanks to everyone for organizing it, and thank you to my fellow panelists and jurists. It's been fun.
Thank you. If you can please have the QR code shown, so you'll get a form that you can fill. And I think I'd like to say a special thanks to Akshata right here. She has been helping us with all the registrations and screening of the startups and everything else related to that. She'll possibly be the one who will also connect you with all the founders right here. So this QR code will essentially have details of all the startups that have presented today with their websites and LinkedIn URLs of the founder. You can choose to directly reach out, but otherwise you can just fill the form and our team will connect. Thank you. That's the end of today's session.
Well, thank you so much, Sagrika, and a great big round of applause for all the presentations today. Can I please request all the presenters to join us on stage? What better way to close this first day right here at GFF 2025. Indeed, been a fabulous, fabulous day with so many interesting sessions. Thank you so much.